Hello traders, Gary Wagner here, just about 10:40 in Honolulu, 4:40 in New York. It is Monday, June 19th, 2017, and this is the Daily Report for Gold and Silver. We are starting off this Monday morning with a dramatic continuation of the bearish underlying pressure in the precious metals markets, with gold closing off by about $11.50 when we look at most active futures contract, currently trading at 1245.10, 1140 our current print, 0.9% in terms of the drawdown. Now it traded to a high of 1257 and the low today was 1244.70. So as you can see, we are within $1 of the intraday low achieved today. Silver also trading lower and trading under more pressure than gold, trading off by about 1.25%, down 20 cents per ounce at $16.45. Platinum and palladium also trading lower on the day. Platinum at $9.24 and palladium at $8.55 per ounce. So traders, although it is only Monday, we have just begun the effective trading week. We can already see that on our weekly chart, we have the formation of a fairly sizable red candle, almost equal to the first week of decline. And that, of course, came in really the first week of June, right after the market had completed a rally, moving from about 1213, just shy of 1300. We can see that here. It's almost a shooting star in terms of the candlestick itself. The only thing that keeps it from that actual label is that typically on a shooting star, the definition is that the tail should be at least 3 times the length of the real body. That's what determines the shooting star. And as you can see, it is probably double at best in terms of the length of the tail when we compare it to the real body. On a weekly chart, we can see that we are now in the third consecutive week of price decline. But the real picture is evident when we take a look at a standard bar chart, and that being of daily bars. And the reason I want to use bars at this point is because I really want to focus on the highs and lows, in this case, particularly the lows as it relates to the closes in the market. And you can see that right here. This is today's bar. We have absolutely breached the 61.8% retracement that comes in at 1246.10. Of course, market is currently trading at 1244. Now, if we have a continuation of this selling pressure, then what levels should we look at for this market to potentially go to? Now, in terms of a straight bullish model, typically, as long as a price point stays above a 200-day moving average, and this is the boldest, or I should say the loosest way to express that, we can make a case for a bullish model. However, any break below the 200-day moving average absolutely signals a bear market is in place. So we could see the market find some sort of support in this area. However, what I believe is our key numbers that we want to watch right now is right around 1240, and that of course would be based on this 200-day moving average, and below that is a 78% retracement, and that falls at 1232. So depending on how the market reacts over the next day or two, we'll be able to determine if we can find some key support in this area. Right now we have no technical evidence to support that assumption, but to see if it finds some support in between the 200-day moving average and the 61.8% retracement. Because if it does not, most likely, and if we see, I should say, a break below the 200-day moving average, our next real target in terms of where gold prices could go to is got to be 1232. Therefore, traders, we will continue to broadcast our bearish stance. We are neutral in the market with no active trades in either gold or silver. Our aggressive traders are probably still sitting in short positions, but on record, we have a neutral stance with no active trades or positions in the market. In other markets that we look at, both the dollar as well as U.S. equities are trading higher. Of course, the dollar contributing to this most recent decline in the precious metals markets. U.S. dollar up almost 0.4% at 97.21. It has traded to a low of 96.75 and a high today of 97.28. If you recall from Friday's show, we did hit our marks as the market came within striking distance of 97 even as we look at the dollar index. Equities, as I said, trading higher. Dow Jones Industrial Average gaining in triple digits, up 144 points at 21,528. That, I believe, is a new all-time record high. Standard & Poor's also trading dramatically higher, up 0.8% at 2453. Also, I believe, a new record high. And about the only index not to close at the all-time record high was the NASDAQ, although I'm going to have to take a look at it during the technical study portion of our show, because that closed up 85 points at 6236. So traders, as far as the dollar index goes, we did get a nice upside move today, roughly 0.33%, but we have had a series of alternating candle color over the last couple of days. We are looking at a daily chart, but if you recall from Friday, our initial target was 96 on the dollar index as the conclusion of downside pressure. And on Friday, I believe that I mentioned we came very close and I called it a match, meaning that I believe that we've taken out the most recent lows in the dollar index and could in fact see the dollar index gain strength over time. At least for today, we are certainly seeing just that. And traders, as I mentioned, as we went through some price changes in U.S. equities, that we had some new record closes. We're looking at a daily chart of the Dow Jones Industrial Average. We actually even have a gap as strong as this market was moving to the upside, gaining in triple digits, closing up 144 points higher at 21,528. Absolutely a new all-time record high for the Dow. And traders, the same can be said for the Standard & Poor's 500. Again, we're looking at a daily chart. You can see that we had, in the same way we saw the Dow, gap higher, but we are certainly above this 2440 area, which was really our former tops in the market, closing at 2453, up 20 points on the day and closing again at a new all-time record high. And lastly, the NASDAQ Composite, which is, of course, the tech-heavy darling of the U.S. equities, closed up today, gaining 1.38%, so a tremendous gain on the day. However, as you can see on this daily chart, we are still far from the record tops that were achieved in the most recent past, but we still had a dynamic close and a gap created in the way the market closed on Friday and then opened again on Monday. Traders, as we look at action today in terms of the precious metals complex, there can be no doubt, there is no mistake. We've got substantial pressure, and the fact that prices in gold closed below the 61.8% retracement could be indicating lower pricing ahead. As I said in the technical study portion of our show today, there's two key levels we need to look at right now. If, in fact, the 61.8% retracement doesn't hold as it hasn't, in other words, if we do not see some sort of a recovery, we want to look at the 200-day moving average and the 78% retracement just below those two marks, because you can still make a case for a bullish model as long as pricing stays above the 200-day moving average. A break below that, however, would or could signal a bearish indication in terms of long-term sentiment. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.